This is a simplified banking flowchart. So the depositors put their money to the bank, and the bank put it in a pool of money. That's the people's money, the depositors' money. A portion of this, they put it in investments like stocks, bonds, and real estate. And the other portion of that, they lend that money to borrowers like you and me in any shape and form of a loan. It can be a personal loan, a credit card, a car note, or a mortgage. And of course, the bank will charge us high interest loan fees. And you as a depositor, they will reward you a very low interest rate. Now, when you look at this banking flow chart, as a consumer, wouldn't you think that this is not really fair? Right? But if you are the bank, wouldn't you want to reap all the benefits of becoming a bank? Of course, you would want to reap all the benefits of becoming a bank, right? But the question here is, how can I become a bank? Well, let me introduce to you the infinite banking concept. The infinite banking concept is a process by which one becomes their own banker. Now, if you understand infinite banking concept, this is going to be the tool to become your own bank. This is going to be your vehicle to operate your finances like a bank. And I bet this is going to be the best tool for wealth building and capital creation. So if you travel from Las Vegas to California, you need to have a vehicle. And you may probably choose a car. To be able to become your own banker, you also will need a vehicle. And that vehicle is called infinite banking concept. But the question right now here is, how much is infinite banking concept? Regrettably, you don't buy infinite banking concept, rather you formulate and create infinite banking concept. And to be able to formulate the infinite banking concept, it's the marriage of three things. The product should come from a mutual company. It should be a dividend-paying whole life insurance. So the marriage of these three things will create now your infinite banking concept. Therefore, you can now operate your finances like a bank. So it may sound so complicated at this stage, but don't worry. We were able to partner ourselves with an A-plus financial ranking companies that they were able to formulate a product that all you have to do is to avail this product and therefore operate now that product like an infinite banking concept, and you are able now to operate your finances like a bank. Have you heard of the IRC 7702 before? Internal Revenue Code 7702 is the law that governs all the life insurance contracts. In fact, this was instituted by the IRS in 1984. So Internal Revenue Code 7702 just tells us that everything that's inside the life insurance contract will be protected against liens, garnishes, judgment, divorce, annulment, and bankruptcy. So for right now, how are we going to benefit from this tax code? So your money, you put it into an IRA, 401k, 403b, TSP, SEP IRA, pension, or what have you. But you and I know that these are all taxable platforms, and it's attached to the market volatility. And if you don't follow it correctly, there's going to be government penalties implied. And of course, you know that there's going to be tons of Wall Street fees there. So what the code allowed us to do, it allowed us to grow our money inside the life insurance contract. You allow that money to grow over time, that when you take it out, it's going to be tax-free, penalty-free, and risk-free. There are tons of product out there that's attached to the 7702. But in particular, to the concept that we're talking about today, infinite banking concept, we are focusing on a very specific whole life insurance product. So now you know how infinite banking concept is being formulated. The product should come from a mutual company, and it should be a dividend-paying whole life policy. So therefore, if we need a whole life policy to create our infinite banking concept, we need to design a policy. Let's just say we put a $12,000 premium into the policy. A part of that will pay for the cost of insurance, and a part of that will go to the cash value. But the goal here is to buy only the smallest amount of life insurance, so you'd pay a very small or minimal amount of cost of insurance, so that the rest of your money will go to your savings. And this savings, you put it into a bucket that will grow 4% fixed rate plus annual dividends. You allow it to grow compoundingly, and most importantly, you want to allow to grow this without any interruption. At this stage, people ask me, what if I need to access my money? When you paid for the cost of insurance, you gained the right to access the insurance company's asset. And this asset is going to be a pool of money which will serve as your bank. With our unique borrowing feature, you can borrow against your bucket A up to 95%. Let's just say there's $10,000 in bucket A, so therefore you can borrow up to $9,500 immediately, and you can access this 100% tax-free. But of course, there's no such thing as free lunch. When you borrow money from the insurance company's assets, they will ask you to pay for 5% simple interest. But the 5% simple interest is actually less than the 4% compounding growing from your bucket A. So therefore, that's what you call a washout loan. The next question I'm being asked is, do I have to pay whatever I borrow? The quick answer there is you don't have to pay for it. As long as your bucket A is intact, you don't even have to pay what you borrowed from bucket B. But then again, the purpose of this conversation is infinite banking concept, that you would like to allow yourself to operate like a bank. So if you would want to operate yourself like a bank, you would want to allow yourself to pay the principal of what you own. So you can pay the dividends only, you can pay any amount at any time, you can pay the interest only. But the thing here is, if you want to operate like a bank, you would want to pay the principal plus an interest on top of it. Because when you pay an interest on top of the principal of what you owed, that net interest will be added into your bucket A. The goal here is to grow your bucket A so you can borrow more and pay back more. In that sense, there's cash flow going on in your whole life policy, and now you're operating like a banking system. The founder of infinite banking concept is Mr. Nelson Nash. In fact, he said that you can leverage this concept however which way you would want to use it. You can use it to eliminate debt. You can use this for college education. You can use this for traveling. You can use this to buy your car or finance your house, or even to prepare for retirement or even investment. So let's talk about some of the benefits of infinite banking concept. So who are the enemies of money? Fees, inflation, interest, taxes. Fees is one of the enemies of money. In fact, in your retirement plan right now, there could be investment fees, administrative fees, fiduciary, and consulting fees, and it may range from 0.3% to 3.5% of your investment. The other enemy of money is interest. These are bank interest, right? In fact, the annual percentage rate is a deception. Let's just say you buy a house at $250,000 and you paid for 30 years, and the bank gave you 6% for your interest rate. In fact, at the back of your head, you are actually paying 6%, but the truth is you are actually paying 54%. That's what you call the volume of interest. The total interest that you could have paid over time for the house of $250,000 is $289,595. That's more than the house that you actually bought. You know, here, U.S. families lose 34.5 for every dollar earned due to finance charges. The next enemy of money is inflation. In economics, inflation refers to a general progressive increase in prices of goods and services in an economy. In fact, the annual inflation rate for the US is 6.2% for the 12 months ended October 2021. So what does it mean? You need to have a platform that has the capacity to outpace inflation. Otherwise, you are losing value of money. The last but not the least, taxes is the worst enemy of your money. How many times is your money being taxed? Income tax, excise tax, real estate tax, sales tax, even gift tax and capital gain tax. U.S. families lose 36% of every hard-earned dollar due to government taxes. The goal here is to eliminate the enemies of your money, all at the same time. The question here is, what will your financial structure look like if you are able to defeat all of these enemies of your money? Exactly. And the only way to be able to defeat all of this is to become your own banker. Another benefit of infinite banking concept is capital formation. In fact, capital formation is the fundamentals of economics. So how can we create capital formation in infinite banking concept? Remember your bucket A a while ago. While your money is earning 4% interest and annual dividends that is growing uninterruptedly, compoundingly, that's what you call internal rate of return. Now, you are able to borrow using our unique borrowing feature from the insurance company's assets. And you can use that money however which way you would want to use it. You can, in fact, invest it into another investment structure. Therefore, you can get an external rate of return out of that. That's capital formation. The other benefit of infinite banking concept is finance. So let's finance this new car. The presumption of this example is that you already have an infinite banking concept that has $50,000 in it. So let's start purchasing this car. You've got two choices here. You can purchase this car using a bank that you don't own, like Capital One, or you can use your infinite banking concept. Either way you choose to buy this car, you have to commit yourself that you're going to pay $889 every month. And for the next 72 payments, or 6 years, the total amount that you could have paid is $64,000. There's about $14,000 of interest on top of that $50,000. And after paying the 72 payments, or 6 years, you're left of a $10,000 depreciated car. Either way you choose to purchase this car. Now, this is where the beauty starts. If you choose to buy this car using a bank that you don't own, after 6 years, you're left of a $10,000 depreciated car. But if you choose to purchase this car using your infinite banking concept, not only that you got your $50,000 back, you also have the $14,000 on top of it, and you also have that $10,000 depreciated car. Now look at this. Where would you want to purchase your next new car? In a bank that you don't own or a bank that you own? And if you look at this in-depthly, when you purchase this car using infinite banking concept, you actually have a free car after 6 years. Another benefit of infinite banking concept is turning liabilities into assets. In fact, what it means is that converting your expenses into making money for you. But let's define liabilities first. These are your mortgage, car note, credit card, business expense, personal loan, rentals, and even household expense. This is how your cash flow process looks like. Your money, your income, wherever it's going to come from, you put it in a bank. And from the bank, you pay all your bills. The question here is, what happens to your money after paying all your bills? You're correct. It's gone. So how can we turn liabilities into an asset or converting our expenses into making money for us using infinite banking concept? So how does it work? So our money, we put it into the infinite banking concept. A part of it will pay for the cost of insurance, which will give you life insurance, living benefits, and automatically increase your state value. Now, your expense money, instead of using that money, we will be using our unique borrowing feature. We will be borrowing money from the insurance company's asset to pay for your bills. Now, instead of your money being gone, it's actually now going to create new money for you, or a new asset in the form of a cash value that will grow tax-free. I would rather pay for the cost of insurance for me to be able to save my money from my liabilities.